Nigeria's equities market witnessed a 10.7% year-to-date gain as investors await the possible outcomes from the Monetary Policy Committee meeting next week. Mohammed Hamza, a research analyst at Norrenberger Advisory Partners, joins me now to discuss sentiments driving Nigeria's equities markets. Thanks so much, Mohammed, for your time. So it's been pretty much flat over the last couple of weeks when you trace the market's performance after a very strong start to the year. What do you make of that? And would you say the market is just gathering itself for another uptrend, or do you think that the sentiment is now to the downside? Sorry, we need you to unmute yourself. Unfortunately, we can't hear you. Can you just unmute?
Yeah, so
yeah, go ahead.
Thank you very much. Yeah, thank you very much. So the equities market, like you mentioned, from the beginning of the year, we saw an uptrend performance reaching to highs of about 12%. But right now, like you said, we've seen tepid performances over the period for about a month now. Last week we saw marginal gain of about 0.36%. The market, and this week we're also heading towards a close of marginal probably decline in the market. But overall, yesterday we've seen the uptrend that was being the uptrend that happened was caused by actually company financials. We saw results of corporates coming into being released. We saw impressive performances from across all the sectors. We saw profitability rising. We saw even impressive dividend yields starting from the financial sector. Picks like UCAP having about double digits, followed by Zenith and GT Bank. So we see value there. Investors definitely saw all the positive indicators from the results that we saw. I also not putting out the fact that we're still on track for a strong recovery coming from the base that we're having from the decline of the pandemic that happened. Going forward, we also see investors positioning. So the reduced levels of trading right now can be attributed to, I think, investors waiting out, because anytime from now we're starting to see indications of how results will be for the first quarter, as full year results are almost rolling in and corporate actions are just coming. So everyone has taken positions, waiting for the ex-dividend date to come up or not. So we could also see interesting results. So we see performances in sectors in the oil and gas sector and the consumer goods. The oil and gas sector supported, of course, by elevated energy prices.
Okay. All right.
Which is, yeah.
All right. A quick view on the MPC decision next week and your views on how that could impact market sentiment.
So, like we've seen all the effects on the market, right? So it's actually this time that we are in has actually shown that we live in a global village. The effects filtering, the ripple effects can be taken away. Last week we saw the Fed, increases Fed fund rates by 25 basis points. Looking at the MPC meeting that was held in January, we're looking at the second meeting coming up next week. All parameters were held constant. So we feel definitely the effects down domestically here, it's going to be a reaction because elevated prices are pushing them. We're seeing policies rolling out trying to curb that, which might actually prices pushing up, the shortage of power supplies filtering into the economy by lowering the activity. Also, on the other hand, pushing prices up. So we feel the decision by the MPC, they're going to take a lead or an anchor from what has been taken by the Fed, and also the Bank of England also followed you as the Fed raised up rate. But we don't see an immediate impact, as we know there's a lag. There's a lag there from the regulatory bodies that we have. Yes, but going forward, we still see strong sentiments from investors as the position to take advantage of the positive